Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. One of the biggest things that we saw back in 2023 was major banks collapsing. Now, if you guys have watched some of my recent videos, the number one highlighted topic that I bring up here and there whenever I talk about a possible collapse is the fact that the banking crisis is not over. Back in March and April of 2023, we saw multiple banks go belly up. And the number one thing that I said is that this is going to continue. Here we have from Brad Garlinghouse during that time. Setting the record straight on SVB questions. Ripple had some exposure to SVB. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business and already held a majority of our USD with a broader network of bank partners. Obviously, a lot is still unknown about what happens with SVB, and as is the case with many others. We hope to have more details soon, but rest assured, Ripple remains in a strong financial position. It's ironic that so much of what's happening as some companies scramble to make payroll highlights how broken our financial system is. i.e., wires are still not 24/7, 365, rumors lead to collapse, and the frictions of moving money within a deeply fragmented system. So here's a highlight of how broken the financial system is, and how a faster payment system and faster settlement could ultimately alleviate a lot of these big problems, and how the financial system needs to be completely restructured. But also what's crazy about all of this, and the reason why I bring all of this back up is, here's January 31st. Guys, we just got a full, massive breakdown of Operation Chokepoint 2.0. Because that's exactly what led to SVB collapsing. Meta Lawman posted this. It's not just the SEC. The Federal Reserve leads the Operation Chokepoint 2.0 crackdown on crypto. Custodia Bank has sued the Fed because it failed to approve Custodia's application for a Fed master account. A Fed master account is essentially a bank account for banks, allowing banks to use the Fed system for checking, clearing, wire transfers, and ACH payments. Federal law requires the Fed to grant a master account to any federal or state chartered depository institution. Custodia is a Wyoming chartered depository institution. It usually takes 5 to 7 business days for the Fed to approve a master account. Custodia waited with no response from the Fed to its master account application for 20 damn months, guys. 20 months. We're talking almost 2 years. So Custodia was left with no option but to sue the Fed. The Fed then denied Custodia's application for a master account 8 months after the lawsuit was filed. Yes, this does sound exactly like how the SEC treated Coinbase's petition for rulemaking. Custodia has turned up some fascinating details in the discovery it has conducted against the Kansas City Fed and the Maine Fed in DC. A tangled web, indeed. In connection with Custodia's application for a master account, the Kansas City Fed conducted a comprehensive examination of Custodia and submitted its report of findings to the Maine Fed in DC. What happened with that report tells you all you need to know about how our government is treating crypto. Capital. After a comprehensive investigation, the Kansas City Fed's report concluded that Custodia's capital was adequate. Without any additional investigation, the Fed in DC changed the report to say there was a lack of a robust capital requirement framework at Custodia. Risk management. The Kansas City Fed concluded that Custodia had strong risk management practices. The Fed in DC changed the report to say there were significant risk management gaps. What's funny about all of this is I'm going to be talking about something that is comical, that really takes all of this into view and flips it onto the Fed. Liquidity. The Kansas City Fed concluded that liquidity risk was relatively low at Custodia. This makes sense because unlike banks that use a fractional reserve business model to lend out deposits, Custodia uses a fully reserved model, meaning it retains liquid reserves covering all of the major deposits. when we look at what's actually happening here, it allows Custodia to actually be fully reserved, 100%. When we look at how big of a move this actually is for Custodia and for a lot of these major banks, most of the banking giants around crypto are just like this as well. They're fully reserved. It has liquid reserves covering over 100% of the deposits. Notwithstanding its hyper-conservative liquidity model, the Fed and DC changed the report to say there were insufficient liquidity risk management processes. That's insane to me. Management experience. The Kansas City Fed concluded that the experience of Custodia's management team was impressive and extensive. The Fed and DC changed the report to say there was a lack of collective depth of relevant banking experience at Custodia. So we're seeing a back and forth between Kansas City Fed and the Fed and DC. The report revised by the Fed and DC to say the opposite of what the Kansas City Fed had concluded was used as the basis for denying Custodia's application for a master account. This is crazy. It is obvious from the documents uncovered in discovery that the process was rigged because the Fed objected to Custodia's plan to provide banking and digital asset services to individuals and businesses involved in crypto. To their credit, the Blockchain Association and the Attorney General of Wyoming filed amicus briefs in support of Custodia's recent motion for summary judgment. Fighting the Fed is the quintessential David versus Goliath battle. Fortunately, Caitlin Long, the CEO of Custodia, is a fighter. But Caitlin is not just fighting for Custodia. She is fighting for all of crypto and the principles of financial freedom. Now, in my opinion, when we really look at what's going on here, it is so damn clear. Operation Chokepoint 2.0 has been going on for a while. I believe that Ripple and XRP can also be thrown into that Operation Chokepoint 2.0. They have been battling the Fed. They've been battling the big giants around the banking sector for a while. The Fed and the regulators have been working against the space hand in hand, holding things back. But guess what just happened? The last time bank credit contracted this much was the global financial crisis of 2008. It's probably nothing. Here's bank credit. All banks, by the way. This is very significant to mention. When we look at this, right? We go all the way back to SVB. We talk about a lot of the banks that were going belly up during that time. We haven't bounced back. They want to make it seem as though it has, but it hasn't. In fact, New York Community Bank Corp stock plunges 38%, reigniting fears for regional banks. They had to halt the stock. And guess what? When we go and look at major banks right now, look at the performance on the 1 month. Look at the performance on the 6 month. I mean, this is terrible. When we look at banks right now, they are under immense pressure, and I feel as though a lot of people are realizing what's actually going on. But between all three of these, we have major banks, regional banks, and savings banks. They are all in the negative on the 1 month. We're not even talking about the 6 month, the year to date, the 1 year, or any of that. When we look at what's actually going on with a lot of these major banking stocks, this is showing you where we are actually at right now in terms of the actual banking sector. While the Fed tells us that all is well. Now let's go back to this, because we have them saying that Custodia Capital is lacking of robust capital requirement frameworks and liquidity management. There's a significant risk management gap. I mean, it's comical that the Fed is saying this when our entire financial system, as we know it in the US, the economy in the US, it's all propped up. It's all fake. The CPI data is all fake. It's all false. But crypto and a lot of the players in crypto are actually solving a lot of these problems. And you might be wondering, why are they holding it back? Well, because the major banks, the big ones, right? We're talking about the big players by market capitalization, talking about Citi, JP Morgan, names like that. They are the ones that don't want to lose out to some of these players like Custodia Bank, for an example. They are the ones that are making the Fed and the regulators do what they do. And I've talked about this in the past. I've speculated on the idea that the regulators are bought and paid for, which I think we can all kind of come to the conclusion that that is the case. Even Ripple, right? Like Ripple and XRP are jumping through hoops constantly, especially even in the US. And it's comical. But we also got an update from Powell, from the Fed. FOMC meeting, January 31st, Powell waits for more data to build confidence on rate cuts. The Fed holds rate steady, sees risk moving into better balance. Powell says rates have reached peak for this cycle. It'll be appropriate to dial back at some point this year. Statement removes reference to possibility of more rate hikes. This is from XRP Drops. Check this out.
We have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, a sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Now, mind you, 24 hours later, we got this. So is that enough price data? Is that enough data for the Fed? Oh, how about when the Fed was telling us that everything's all fine, that the banking sector is healthy, that liquidity in the US banks is healthy as well? That's what they told us back in March and April. And we know for a fact that that is false, because banks have been under significant stress. They've been under significant pressure. And the big problem is that there's something much larger happening here. Now, the big thing for me is, when we look at what's going on around Ripple and XRP and around a lot of these crypto companies, I question, why aren't we seeing a major push on innovation to actually alleviate a lot of these pain points? I mean, think about how much trapped capital is out there that could be alleviated by adopting some of these major solutions within the space. Specifically, we talk about this even with Ripple and XRP. But it's because they're not pushing US-based companies forward. They're targeting crypto projects so that the major banks continue to get richer and become even larger hand over fist. I mean, if you go back to March and April of 2023, JP Morgan was buying up those banks that were collapsing. And they also took over the deposits. They held more than 10% of all deposits within the US, which by regulations shouldn't be a thing. That shouldn't even be possible. And what all of this proves to you is that they're trying to keep this banking monopoly system running. And it's so comical at this point that mainstream media, they'll never tell you any of this. Most people are still distracted, and the Fed keeps pushing their nonsense on how everything is all good, it's all fine. They're trying to paint a picture that we know is false. Even the CPI data is falsified information. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.